Welcome traders to another price action trading lesson, and in front of us we have a trading range. When I'm trading a trading range, I want to pay attention to what is the overall bias inside of this range, meaning what is the health of this trading range. And I can see that the support at the bottom and the resistance at the top is being tested quite regularly at the beginning of today's session, but later on prices are failing to reach the main support once and twice. So this is already starting to hint a potential bullish imbalance, because prices should have normally went all the way down and test the main support. The fact that each new low is higher is indicating potential bullish imbalance. And now I have two conflicting channels. The downtrend needs to get new extreme and the uptrend needs to get new high as well. So there's a reason to price movement. There are channels being present on the chart. And in a situation like this, I want to wait for more information from the market. What is going to be the main bias? Right now the prices are breaking lower, and we can see that the prices are trading back above the EMA, and this is important. After this, because we have a new high, I'm going to reset the count. You have a first entry long, pull back, second entry long, because after counting I'm looking for breaks above the bar's highs. So we have a first entry long that failed, and this is the second time we broke above the high, counting from this high. So first entry long, second entry long, we're breaking above the EMA. I cannot take it, it's below EMA, but it's confirming the bullish bias. And notice what we have. Right now we have high-low confirmation setup, because this second entry long formed below EMA, and when I'm unsure if the second entry long is going to be a good enough setup to take, the high-low that stay above the EMA is confirming not only the bullish bias, but also it's confirming the second entry long that now it is okay for me to go long. So this is the first high probability setup for the day. However, I'm only marking this for education purposes, because this is right around the stock market open, and you never want to be pulling the trigger right around the open. There can be spike in volatility, a little bit of a whipsaw. But next time you will see a situation like this, the fact that you're staying back above EMA and it's confirming the second entry long, you expect new extreme, and the prices are trading to the upside. Okay, so this is definitely confirming now that we have the bullish imbalance. So even though I'm playing a trading range, I can see that the structure is a little bit more bullish. This gives me an idea that we're most likely going to break higher, and I'm not supposed to be focusing on fading the breakout, because once there is a bullish imbalance, the breakout can actually be successful. You can see prices keep trending higher. Okay, we have a new high, first entry long, pull back, second entry long. Why am I counting for these second entry longs? Well, because it's going to be a high probability setup if it forms at the key entry point, at the 2-1 bar exponential moving average, or at the trend line, and prices are trending to the upside even more. So at this point, it's becoming pretty clear to me that the bias in this market is way too bullish, and we're not even coming back to test this key level. So the structure is shifting into bullish channel, and I need to find the key entry point, because remember, there's always a reason to price movement, and this bullish channel follows a trend line rule. So I'm going to connect the first major swing. So you can see there's some reactions on geometric formation at the bottom, allowing me to connect it. I'm just going to copy and put it at the top. Okay, we have a slight overshoot, and prices keep trending even higher. At this point, I can see that the prices are overshooting the trend channel line, which means I need to respect this trend channel line, because I can get a stronger momentum in the opposite direction. It can break the channel. So let's see what's going to happen. However, the structure is more bullish, so the current trend in this market is bullish. EMA keeps pointing up, and I have series of high highs and high lows. Okay, we have a new high, first entry long, because we broke above this bar's high. So we have a first entry long, fell instantly, and we have a second entry long breaking above this bearish bar. I cannot take it. It's above the bearish bar. We had an overshoot, and notice what is happening. Okay, so we're pushing back above EMA. So at this point, the bullish bias is getting confirmed again, because the trend line held here nicely. Actually, I even have it a little bit tighter. I can have it like this to make it fit even better. So in this situation, what you're expecting, just like you're expecting right here, you have a second entry long, you're expecting high-low confirmation, because this second entry long looks horrible. Notice the first signal bar is bearish, and the follow-up bar has a big bearish stem at the top. So either way, we can't really take it. So you're expecting high-low confirmation setup, and notice we have high-low confirmation setup. At this point, I can also see that the overshoot is not reacting as strong as overshoot should have. So I can make it a little bit wider because you really are not supposed to create such a strong momentum if overshoot is the pattern. So this is how you're going to decide that you can now look to go long because you have massive bullish leg. Can I take a high low confirmation step of the second entry long? I cannot. Notice straight bearish bar. What is the second bar? The second bar is bullish, so possible double bar entry, but this one is too big. It's too late. The scalp was already made and I'm entering too high. So even though I expect the high low confirm the second entry long, just like it did here, because something is wrong with the second entry, I cannot take it. And we missed a great setup, but that's okay. I cannot really pull the trigger here because it already was too late and the signal bar was bearish. So context wise, great, because notice at 2 key entry point at the EMA and at the trend line. This is why I'm trying to always look for these channels, because this is the place where the correction phase will end, the pullback will be over, and the push phase will start. And if you have more key entry points, the better. Okay, we have a new high, first entry long, second entry long. We are breaking the channel. Since the channel is getting broken, do I expect new extreme according to price action? Excuse me, do I expect to push down? I don't. Because in price action, according to trend line rule, I'm betting that the market 90% of the time is going to reach the new extreme. I'm following the trend. I'm not looking to pick top, to counter trend. I'm looking to buy at the lows. And once again, today is a great lesson how to anticipate high low. Notice we have a second entry long, break above this bar high, which means there's a first entry long, fell instantly, and there's the second entry long. You can already see, even though the second entry longs are not forming the great sketchy here, it's still generating the winning scalp. So there's a power into like a pullback at the key entry point. Can we get a high low? And this would be a great high low. So once again, I'm just gonna copy high low, copy second entry long. My bias still remains bullish. I expect new extreme, but there was no trigger. Notice for this high low to trigger, it's not enough that I have just a bullish bar. I need to have break above this bar high for actual setup to trigger. So there was no high low triggering, which is a shame because I was willing to take it here. And notice the high low is actually triggering above this bar. But by the time this bar gets a trigger, EMA in one of these bars, the setup bar is horrible, doji-ish, and it really should have triggered here above nice bar. Now it's stalling a little bit, breaking below EMA, and look at it go. So unfortunately, the timing of the market wasn't generous today, because here we would have been able to enter and make a winning trade, but unfortunately it stalled a little bit, triggered here, and by the time we get a trigger, we can't really take it because it really didn't set up well. And prices form new extreme, so I'm going to mark new extreme, new high, and the prices are actually trading all the way down. So I'm going to redraw the shortened downtrend. Okay, now I'm going to zoom back. When I was watching this was quite a significant trend to the upside. We have surpassed the trend range quite a lot. So I was even eyeing a potential uptrend, something like this. This is what I drew on a chart. And I can see that this is extremely sharp move down. Notice a very steep leg down. In order for me to buy, I would definitely need to see push above EMA. And notice we're completely ignoring the channel and trending all the way down here. And by the time you're here, I have to switch the gear. Don't hold on to your analysis too firmly. You have to be open-minded. If the structure is indicating to you that we are reversing bearish, this was just a potential idea if the channel is going to get confirmed and we're going to push above EMA. We haven't. We had a very strong reversal down. So I'm just going to delete it and I'm going to adapt to a brand new structure. And you can see how bearish this looks. So I'm going to make a new channel. And since the structure right now, the bias is bearish because of the bearish downtrend, you can see trend up, break new high, trend down. So I'm expecting for two-legged pullback. This time I'm counting from the lows. I need to reset my count after each new low is broken. So this is the lowest low, first entry short, lowest low, first entry short, lowest low. You can see this is how I'm constantly counting again. Once again, new low, first entry short, actually pullback second entry short a little bit, but it doesn't matter because it is so far from EMA and prices reached new extreme. So once again, here I have to pause looking for shorts. And if I'm going to zoom back a little bit to make it easier to see, this is a very strong downtrend, but notice you haven't touched EMA once. So we are not really at the key entry point. And you cannot get flustered by seeing the market go without you. Just because it is working here now, that doesn't mean that the next time it's going to do the same thing. The next time we will see a downtrend like this, it's going to nicely pull back to the EMA and get a two-legged pullback. So I just have to sit here and watch. I have to be disciplined and not to force a setup. We break, new extreme. Okay, if I get a second entry short, can I take it? Not really, because it's above EMA, big bull bar, not the great bearish bar, but also we just had a break in new extreme. So we may have stronger correction. I would need lower high. Okay, and you can see you don't need to even worry about this because prices are trending to the upside. Okay, you have a new low first entry short, second entry short failure, but it's a gap between the body and the EMA. It feels a little bit too early compared to this massive push down that haven't even break above the EMA once, so we want to be careful a little bit. Okay, prices are trending higher. You can see some spike and a smaller channel. That can be possible variation of spike and a channel. 1, 2, 3, 4, 5 bar stacked. I can't really go long or short. There's even not a trigger. 6, 7 bar stacked. So I'm just waiting patiently. And notice we have micro double top resets the count. I'm just going to redraw so you guys can see it better. Micro double tops reset the count in price action. This is the first top that I would count for first entry long. And first entry long, in order for me to not reset the count, is supposed to close lower than the high that I'm counting from. And this didn't happen because this is the high. Double top resets the count because we matched the first high. I need to reset my count from the second top. Okay, so I'm starting my count over here again. And we have a break above these bars high, one little tick, first entry long, pull back, and we have a second entry long. Second entry long, while the prices are closing above the EMA, and we anticipate new extreme, decent bullish bar, actually tier 1 signal bar closing on its high, more aggressive setup, but you can consider taking because the spike and the channel needs to get new high, and you close above EMA quite strongly. You know, matching lows here, but okay setup to take a chance. And by the time we get high low, you already have a micro new high, and it's a little bit stacked here. It's a little bit too big. I want to be patient here. Okay, and prices are trending to the upside even more and even more. Okay, so at this point, there's a probably bigger channel because you have so many pushes to new extreme, so many legs to new extreme of this tiny spike in a channel. So this is where I looked at the bottom and was looking for channel like this. The first two swings allowing me to set up the trend line. Third swing, fourth swing confirmation. Perfect. I'm just going to copy it, put it at the top. And you can see there are always channels for every price movement. It takes skill for you to understand how to draw these channels, and you don't have to get it right every single time. There's nothing wrong about this. I'm also trying to always look for the best alternative because you're getting close, and eventually you'll fine tune it. And you don't have to be perfect. That's actually a good thing about this. You just have to be close. Sometimes it matters for you to be perfect, but most of the times, if you're close enough, that's okay because you're also working with the EMA and you're waiting for EMA to hold prices. So don't be too flustered about when you are not having the trend lines drawn perfectly. You don't have to be perfect. You don't have to be perfectionist. You have to be close to know that the trend is up. You're looking to take a setup at potential key entry point, and with more price action, you can fine tune it more and more. And by the time prices will pull back, you get a good setup. So we can see that we have new high. So what am I expecting? First of all, I'm going to reset the count. Okay, because we have a new high here. I have a first entry long. So I'm expecting the same thing as always, the second entry long. And notice new high, first entry long, pull back, second entry long. Now this is inside bar, so more aggressive, but I have two key entry points. The bullish trend is present, so the bias is bullish. The downtrend played out. And since I have two key entry points and the signal bar closing quite nice, this is a great second entry long. I actually took this trade myself. You have a high low now, but by this time you can't take it because it's too stacked. It's getting a little bit wedgy. When you're taking this second entry long, the wedge is not as apparent. Okay, it's just a tool like a pullback, a little bit wedgy, but very minor. You can definitely bet more on the key entry point. By the time you get this, it's definitely more wedgy like this. So you can't enter here. If you haven't entered here, you have to be patient. And notice, I got stopped out. So that's okay. The setup followed the rules. I took a losing trade. On to the next one. We have a break. Actually, I took this trade myself. So because I like the tool like a pullback, two key entry points, great signal bar, so many positives in the setup. Spot a trading break, new extreme. I'm gonna mark new low. and prices are trending higher. And okay, we're breaking lower again. A small little congestion. You break new low, and you're pushing above EMA. Okay, so at this point, the structure is getting bullish again because we didn't manage to go all the way down. Always work with the EMA. EMA, the 21 bar EMA supportive indicator. It's very helpful to help you make sense and to clear up the overall picture. Because if you're watching this, if the EMA is going to hold and you're going to go lower, actually, if the EMA is just going to hold, you expect the market to go lower. But notice what you have, instant bullish push. So this is right now telling you, okay, we're about most likely to reach the new extreme. So you're thinking now more bullish. You have filled second entry short, but it's so far away from EMA, so far up. You can't take the filled second entry short. It's so far away from EMA. Remember, it needs to close the EMA. Now you have continuation, but it's a horrible bearish bar. I cannot go long above bearish bar like this. So I'm just waiting. There's no setup. Okay. And prices are correcting a little bit more. Okay, fine. So I'm just going to be a little bit more patient. Okay, you can see EMA flattening. What is the bias? Hard to say. I can see that we have small support at the bottom, small resistance at the top. You know, just follow the price action pretty much. No clear bias. The bias is more bullish, however, because we traded up and this channel needs to get new high. So I'm not really leaning bearish. I'm just looking for some good opportunity to go long, but nothing's pretty much being offered. We have a new low, first entry short, second entry short failure. You know, the setup is not bad. If I'm going to connect the minor swings to the bottom, it's off the channel. The downtrend played out with the break new low. And since price action likes to move in pairs of twos, we have first leg down, break, second leg down. You know, these two legs match so nicely. You can actually consider going long here. Fell second entry short. Great tier 1 signal bar. You're above EMA. You enter once you have a break above this bar, and your stop loss goes one tick below the signal bar. Why? Because you're using the price action structure to help you protect your stop. Okay, the target would be 8 to 10 ticks because you're a scalper and you're betting on reaching the small scalp. And notice you would have survived by one single tick and eventually managed to get the scalp. This is why we keep the stop loss one tick below the signal bar. You cannot put it in the middle like this. You cannot monkey with the trade. You need to have room to write out the noise. There's a pullback in price action. Not every single time the price is just going to break higher and get your scalp within 5 seconds. There's a noise. There's a pullback. That's a possibility. You need to protect your trade by putting the stop loss one tick below the signal bar. You cannot make it too wide, because you want to admit that you're wrong in case your analysis is incorrect. Because you definitely cannot move the stop loss, A lot of times that happens to beginner traders. They refuse to admit they're wrong. They're holding on to their analysis and they keep moving it, keep moving it, keep moving it. They keep moving it. I've done the same thing myself when I was starting out. And eventually the dollar amount is just so big that you cannot take it anymore. You will take the hit. You will be so frustrated because if you just took your normal stop loss, you can make it right back on the next trade. But because you keep moving it, you refuse to admit you're wrong. You're basically hoping that the market is going to rescue you. It's going to suddenly go in your direction and it's going to relieve of your pain. When you find yourself in a situation like this, when you're hoping the market is going to do something for you, you pretty much just have to close the trade instantly, because that's when you're being too subjective and you're not using the rational part of your brain. So never move your stop loss. It's always easier to make the trade back on the next one than when you give back all of your profits just by moving a stop loss. But it happens to every beginner trader. That's pretty common process. Okay, prices are breaking to the upside. Pretty much nothing I can do. We have a new extreme for this uptrend, but there is no reversal, not even correction. Okay, prices are trending to the upside. We're still quite far away from the EMA. There's a spike and a channel alternative, but we can't even pull back significantly to the EMA. And at this point, it's getting a little bit too late. But we create a new high and the market is stalling. So trendline will fulfill. The day was fairly straightforward. Nothing unpredictable. It's a shame you didn't get a good signal bar on this high low or this high low, because these would have been a great high probability setups. This setup was right around the open, so it's a little bit unfortunate. But other than that, simple price action, break new high, break new low. I had a losing trade right here, but it's okay. I definitely like taking this trade because there are so many pros in favor of this setup. It's part of trading. You have to accept losing trades. And then, the market got quite slow and the market closed here. So I hope you had a decent trading day, and I hope you find the video helpful and educational.